So essentially, it's just a record of every financial transaction that
Mm-hmm.
takes place in the economy in a given time period. So it's almost like looking at a bank statement, except it's for
Mm-hmm.
the country, the nation. Um, and that's literally what it is. It just records all the transactions that's taking place between consumers like ourselves, firms, and the government
Okay.
from one country to another. So that's essentially what we're looking at. So we want to look at how much we're spending on imports and how much we're making on exports.
Okay.
When we sell to foreign countries, that generates a positive balance on our statement because
Mm-hmm.
it's recognizing money coming in. It's an inflow of money, right?
Yeah.
Versus imports, when we buy things, we're having to give up money, and therefore
Yeah.
that represents an outflow.
Okay, that makes
So
sense.
it's the difference between the outflows and the inflows that gives us this quote unquote balance.
Okay.
The balance of payments has three aspects to it,
Mm-hmm.
and we're going to cover all three. So it's almost like having three mini statements within this bigger report. How I like to think of it is, imagine now you get your end of term report from
Mm-hmm.
school. You would have, I mean, you have two teachers, right, for economics.
No, actually, I only have one, but
Oh, you only have one.
yeah, for most subjects, I have two. That's just
Okay.
economics.
So let's imagine your other subject where you have two teachers. Each one will write a summary
Mm-hmm.
of a performance, and that's what like the balance of statement is like. You have, so it's called the balance of payment, and then within that you have the current account,
Mm-hmm.
you have the capital account, and you also have the financial account, and we're going to study all three of them
Okay.
today. But let me just give you an overview of each one before we begin. So the current account is just the summary of transactions on goods and services.
Mm-hmm. Okay.
That's what it is. It's recording how much we've spent and how much we've made on goods and services, as well as a couple of other minor things, such as income and transfers.
Mm-hmm.
Income and transfers can either be primary or secondary
Okay.
transfer. If it's primary, that is essentially when we make interest or profit or dividends
Mm-hmm.
from our factors of production.
Okay. That makes sense.
And then secondary is simply when we transfer money to multinational agencies such as the EU or to the World Health Organization. So those organizations need a budget to manage whatever they're doing.
Mm-hmm.
And that money comes from the contributions of other countries,
Okay,
such
so
as
because
the UK.
they're like big organizations with loads of countries involved, all those countries. So
Country.
when the countries transfer the money, it's like that. It's given to.
Exactly. There you go. Exactly. So until, I mean, we're still technically part of the EU, even though we've left. So we have to contribute to the EU budget to make, because the EU itself has a parliament of its own, it has a civil service of its own, and then it does a couple of other things as well. And that money has to come from somewhere. So it comes from the member nations, which includes the UK. So that's the current account: goods, services, and then income and transfers.
Okay, that
If
makes
it's
sense.
goods, we call it tangible because you can see it, you can feel it, you can touch it.
Mm-hmm.
Services, it's intangible, it's invisible, right?
Mm-hmm.
It doesn't have a material form.
No.
So that's your current account at a quick glance. Your capital and financial account simply represents investments in usually foreign companies
Okay.
or ownership of fixed assets. If you own, or if the country owns more than 10% of that company or that asset, it goes on the capital account.
Okay.
And if it's less than 10%, it goes on the financial account. I will show you a quick mind map. Cool.
Okay.
Let's look at it. So let me start again. Okay. So the capital account is recording, money that is transferred between experts and migrants,
Okay.
as well as debt forgiveness to countries. So, for example, if you have family living abroad
Hmm.
and you send money to them, that goes in a
Hmm.
capital account.
Okay.
So, typically, a lot of ethnic minorities like to send money back home to
Hmm.
help out. So, that goes in a capital account. If it's the financial account, that's simply a record of all the FDI the country makes. So, foreign direct investment,
Okay.
as well as
That's
portfolio
like
investments.
any person investing would be an FDI as long as they were big enough.
Usually, yeah. So you tend to find this being like governmental departments. So, for example, in the UK, we have one, the Foreign Office,
Hmm.
but we also have the Department for International Trade, and then we have, yeah, so we have the Department for International Trade and Development, DFID, who is responsible for a lot of this stuff. There are three branches of the financial account.
Hmm.
FDI, which is where you're buying more than 10% of a foreign company.
Hmm.
Portfolio investments, when you're buying less than 10%.
Hmm.
And then other investments, which includes loans, foreign currency that we hold, and bank deposits.
Okay.
Usually what you want is, the reason it's called a balance of payments is because you expect it to balance. Your ingoings or your incoming should match your outgoings.
Hmm.
It's a bit more complicated than that, because how do you account for every single penny?
Yeah, some will go missing. Don't you need to,
Exactly.
there's this one which just doesn't it like it's that one, the balancing item,
There
just
you
making
go.
sure it all makes
Yeah,
sense.
to make sure it all makes sense. So that's where you get the balancing item. So
Mhm.
that's just making sure the sum of all the accounts come to zero. And if it doesn't, then you get the balancing adjustment.
Is it you like the balancing item? Obviously, it needs to be there because this is really complex. Do they have the balancing item because they don't have enough like people to work out how the penny's gone, or it's just like
It's just
what?
difficult. You can never have complete records.
Oh, okay, so it's just a few records that
Yeah.
just they're not aren't there. Okay.
So, for example, there's stuff in the economy that's not reported. Maybe it's linked to crime. Maybe it's linked to the proceeds of corruption.
Oh,
People just not reporting their incomes or their transfers. It's not easy to trace, especially if it's cash based.
yeah. Okay.
So that's why you then need that balancing item. But good question.